Coming up on Retiring Well.
Sometimes the roads can get a little bit rough. We've seen the markets now since 2000 drop to half their value now twice.
So if you are feeling confident in your economy and your own personal finances, you're going to spend more.
When we start seeing real estate sales starting to slack or the median sales price start to get a little bit less in real estate, we need to start asking ourselves, okay, what does this mean?
We are talking today about alternative routes.
Hi, welcome to the Retiring Well TV show. My name is Larry Flynn. I'm one of the advisors here with Centennial Wealth. Listen, this is a special edition. We're going to be talking about how to navigate rough roads in the market when they get a little bit rough. And it isn't funny, I got the backdrop behind me with Cass and Lake Street, and you can see the construction going on. Isn't it funny, this time of year in northern Michigan, they want to do all this construction because we're trying to beat the winter months, right? So, listen, sometimes the roads can get a little bit rough. We've seen the markets now since 2000 drop to half their value now twice. I think 2000, 2002, it took 2.5 years for the market to drop to half got value. When we got to 2008, it only took 15 months for it to drop to half its value. But people remember those times. You know, if you've got any monies in IRAs, 401ks, and the like, when you see the market drop to half its value, it can be quite painful. So we know these times come. Everything's cyclical in our economy. You have times, you have periods where the economy is in what we call expansion mode, and then typically they're followed by contraction. You know, for us that are in this business, we find this, you know, very common. But what we want to know is how to navigate, and we're going to talk about this in some of the segments here we got here shortly, but we're going to talk about how do you navigate those kind of roads when you have all this kind of market uncertainty. If things always went upward all the time, well, that would be easy to navigate, right? What we call smooth roads. But when times get a little bit rough, we want to know what to do. Listen, the other thing we got that makes things a little different now is that we've been in a declining interest rate for the most part 40 years. If you go back to 1980, the 10-year Treasury rate was just under 16%. You fast forward to 2000, it was just under 7%. And then about a year and a half ago, I hit a historic low of just a little over 1%. So when we're in a declining interest rate market, you know, that's great for bonds because when interest rates go down, bond values go up. Well, you say, how does that work? Well, think about it. If I'm holding a bond today that's paying 3% and I can get a bond tomorrow paying 6%, who wants my bond paying 3%? So what they'll do is they'll adjust the value of the bond fund accordingly for the lost interest. So now, wouldn't you agree, we're in a rising interest rate market. The game is much different. The road is going to be much different as we go forward. With this market volatility and now rising interest rate market, I want you to stay tuned because this is a show that you're definitely going to hear more about.
Today's retirement challenges can be mastered. Knowledge is power because you can confidently plan ahead and make educated financial decisions for a successful and comfortable retirement. We are Centennial Wealth Advisory, Northern Michigan's financial advisors specializing in retirement planning with offices in Traverse City, Petoskey, and Gaylord. And we invite you to an informative and exciting live event with a complimentary gourmet dinner. You'll learn how to use the new tax reform to your advantage, the best way to generate lifetime income, how to identify and manage financial challenges, how to reduce your tax liability and increase your cash flow, how to maintain growth opportunities and reduce risk, and much more. Call 888-608-5825 to register and choose the date and location that works best for you. Thursday, December 6th, or Tuesday, December 11th at Boone's Long Lake Inn in Traverse City, or Wednesday, December 12th at the Otsego Grand Event Center in Gaylord. The live event starts at 6 p.m. and is free to attend with a complimentary gourmet dinner to follow. But seating is limited and fills quickly. Call 888-608-5825 to reserve your seats today. There is no cost and no obligation. Don't miss this important live event. Educated financial decisions. Call 888-608-5825 today. Retiring Well is now also airing on radio, bringing you insights from Northern Michigan's financial advisors specializing in retirement planning. Every Sunday at noon on WTCM AM 580. Don't miss Retiring Well Radio. Every Sunday at noon on WTCM AM 580.
Welcome back to Retiring Well this week, and we are on live here in downtown Traverse City, talking about how to navigate markets in rough roads. Now, coincidentally, John, we're standing here now on a good section of road, a smooth section, just a few feet from us. It's pretty rough, but we want to take a little bit of time here and talk about what are some of the things we look at and analyze throughout the year on both good and bad roads. But mainly, let's talk about the smooth roads. You know, one of the things I know with kids, both of our families, we have young kids, when we get everybody loaded in the car and we're heading out to our destination, whether it's to the Cherry Festival or Alpenfest or whatever, maybe up across to the Bridge Walk, stuff like that, we want smooth roads, right? We don't want 4 or 5, however many kids that we may have crying in the back of the car, right?
Oh yeah, I mean, I was thinking of a trip I took with the family up to Marquette this summer, and we were traveling, and I found this Yellow Dog Falls. I thought that'd be a great place to go, and it was, you know, just this little 2-track. I didn't know where I was going, and we were just winding through there, and pretty soon my wife was asking me, John, when are we going to get there? And I said, well, it's a short way on the map on your phone, right? And by the time all was said and done, we traveled about a mile, and it took about 20 minutes to go that 1 mile. So yeah, there can be some rough roads along the way there.
Right. So now let's talk a little bit, bring this back to like the economy, and what are some of the things you can look at when kind of looking at that. One of the things that I think a lot of people go to is, and I almost think of this too as like a gut check, like is consumer confidence. You know, consumer confidence in the economy, in the market, stuff like that. You know, when that, what is it, 70% of our economy, I believe, is driven on consumer spending.
Right.
So if you are feeling confident in your economy and your own personal finances, you're going to spend more, right?
Most definitely. And I mean, that's what I think of when we're out on the weekends and shopping and everything, and you see there's a lot of people downtown here, Traverse City. I know in Gaylord we see it's busy. Petoskey is busy downtown. And so there's a lot of people out spending money, which ultimately is driving this economy.
Right.
So.
Especially leading into maybe holiday season, stuff like that. Obviously, where there's a lot more retail shopping going on in many cases.
Sure.
You know, I think of all the delivery trucks running around the area, and you see the delivery drivers wheeling big boxes out. Obviously, people are feeling pretty good when they're spending that money and buying it, especially some of those extra items.
And along with that, then, are all the jobs that are being created within that. And so if people are out spending, then these employers are continuing to want to get people in their shops and working there for them. So
you bring up a really great point. As another indicator is unemployment, right? And then you're right. When consumer confidence goes up, it tends to put more people back to work, which then obviously can potentially put more money into the economy. So looking at those unemployment numbers and the workforce numbers obviously is another great indicator that once again drives that consumer spending, which leads back to that 70% of our economy is driven on that.
Right. And so so we're seeing things moving along pretty smooth right now in regards to the fundamentals of the economy. But obviously within the market, there's going to be turbulence that goes on. I mean, that's sort of commonplace that we see these corrections happen and things moving around quite a bit, and that happens quite often. So.
Absolutely. Another one that I don't know if as many people look at, but is another interesting one. It's kind of like consumer confidence, but it's small business sentiment. What are small business owners feeling about that? And looking at that as well to see where, are they willing to invest some more of their capital into their business to try to grow it, or are they in contraction mode, whatever that may be, is another, I think, interesting indicator since so much of northern Michigan is run on small businesses.
Oh, for sure, especially in our area where tourism is very popular, and so you need that constantly people coming to the area and traveling here to basically spend their assets, and along with that, it's becoming more and more popular as far as a retirement community as well, which plays a significant role.
Absolutely, and a lot of that too goes back into unemployment, you know, and sure. Once again, that's why as you kind of can imagine, all this sort of stuff ties together. I mean, when you have one start to help the other, it kind of has a snowball effect, and when you get into that rough road, that construction area, it kind of has the reverse effect, right?
Right, and so yeah, you definitely want to be paying close attention into all these different factors, not just simply just reliance solely on what the stock market does on a day-to-day basis, but looking at a lot of these fundamentals to determine, okay, how are things moving along, and look at, like, another one that I notice is the home building. We continue to see that increasing, especially in northern Michigan, and I think across the country, and so that plays a significant role in not only providing homes for people, but that's a lot of jobs of people building houses.
Right, and not only, right, and then you think of just not only the jobs of providing the houses, it's also the material that goes into those jobs, not only the lumber and the shingles, the appliances, and then you have the excavation of the site and the paving crew that does the driveway, and then the landscaping. I mean, it continues you think of, just like when you build a car, when you build a house, there's so many integral pieces that go along in that it helps in so many different ways.
Yeah, and I mean, we're seeing interest rates then come up, so when people are going to borrow money to purchase that home, then we're seeing that happen along the way as well. So.
Well, folks, there's so many different things you can look at in the markets, especially when you come to the fundamental analysis. We just scratched the surface briefly here with some of the stuff that is, I think, of interest to some of the stuff, especially in our area here in northern Michigan. If you have any questions or would like to talk further about this, give us a call at Centennial Wealth Advisory. We'd love to talk to you.
Today's retirement challenges can be mastered. Knowledge is power because you can confidently plan ahead and make educated financial decisions for a successful and comfortable retirement. We are Centennial Wealth Advisory, Northern Michigan's financial advisors specializing in retirement planning with offices in Traverse City, Petoskey, and Gaylord. And we invite you to an informative and exciting live event with a complimentary gourmet dinner. You'll learn how to use the new tax reform to your advantage, the best way to generate lifetime income, how to identify and manage financial challenges, how to reduce your tax liability and increase your cash flow, how to maintain growth opportunities and reduce risk, and much more. Call 888-608-5825 to register and choose the date and location that works best for you. Thursday, December 6th, or Tuesday, December 11th at Boone's Long Lake Inn in Traverse City, or Wednesday, December 12th at the Otsego Grand Event Center in Gaylord. The live event starts at 6 p.m. and is free to attend with a complimentary gourmet dinner to follow. But seating is limited and fills quickly. Call 888-608-5825 to reserve your seats today. There is no cost and no obligation. Don't miss this important live event. Educated financial decisions. Call 888-608-5825 today. Retiring Well is now also airing on radio, bringing you insights from Northern Michigan's financial advisors specializing in retirement planning. Every Sunday at noon on WTCM AM 580. Don't miss Retiring Well Radio, every Sunday at noon on WTCM AM 580.
Welcome back. Thanks for joining us again here on this segment of Retiring Well. John and I just talked about having smooth roads and kind of the things that we look at when we're talking about that, when we talk about financials and economy. Larry and I are back here on site again on the construction of Lake Street here in Traverse City, Michigan, and we're going to talk about what to look for when potentially there may be rough roads ahead. On construction sites, we have the advantage as you're traveling. Typically, there's signage well in advance that's preparing you, construction ahead, be prepared to stop. Some of those bright orange signs that we're accustomed to seeing here in northern Michigan. But in the financial markets, sometimes those bright orange signs aren't as don't appear like that in many cases, and sometimes they do.
Yeah, sometimes they just come out of nowhere, you
Right.
know. I always think about it, you got your way to go to work every day, and this one in particular is one that I cross every day, and one morning I wake up, I'm driving to work, and all of a sudden there's all these road signs saying detour and, change roads. You never know sometimes when they're going to come. Sometimes you hear about them in advance, but a lot of times they just pop up, right?
Sure.
Especially here in northern Michigan. Why is it this time of year they always want to do all their road construction, right?
Well, I think because we all know here, it's as we got our jackets on, the time that the road construction is going to stop is pretty soon because there'll be snow plowing.
Right, and they don't want to do it in the summer, right? Because we have all the tourists here,
Right.
so there's this window of time that they want to get them all done in, right? So, and I thought it interesting, John, talking about driving up to the UP and going over the Mackinac Bridge. Art, I don't know about you, but I can't stand to drive over that bridge. I'm that guy that hugs the center and goes over the metal grade there, because I can't stand to get over near the edge.
It is fun to see you around heights.
Yeah, I'm terrible with heights. So, but listen, when talking about rough roads, you talk about in the first segment how we keep a focus on the fundamentals. I mean, because really the fundamentals is what drives the long-term success of the market. But the other thing we want to look at is what are those things that start to give us some early signs that things might not be right. I mean, I talked about in the introduction how we have had the market drop to half its value twice now. Now were there some indicators, some things that might have been pointing to that ahead of time? That maybe we might want to pay attention to. I mean, liken it to that road construction, the signs up ahead, wouldn't it be nice to avoid that if you could, right? But I think there are. I think you mentioned in the first segment, when we see fundamentals, the good fundamentals start to slip, well, that's an early sign that we better be starting to pay attention, right? When we start seeing real estate sales starting to slack or the median sales price start to get a little bit less in real estate, we need to start asking ourselves, okay, what does this mean?
Right, because John and I talked a lot about that consumer confidence and that spending, right? So what you're saying, if there's some of that starts to slow or in that real estate housing, that may be a construction warning sign, huh?
Right. What about, like, for example, the manufacturing index or maybe non-manufacturing indexes? This is easily tracked, and when we start to see it kind of start to slip or see it kind of on a downward trend, we probably should be asking ourselves, what's this leading to, right? Because if there's a slowdown in manufacturing, that most likely is going to be a slowdown in employment, right, which again affects consumer spending. Same thing with the non-manufacturing index, right? But there's other indicators out there, and I can't mention them all by name, especially in this segment, but there's a number of what they call sell-side indicators. Different indicators that have predicted, market corrections or bear markets that happen soon after. One I can think of, and I can't mention the name, but they complete since 1985. They predict what the market's going to do next 12 months simply by doing the opposite of what the Wall Street pundits thought, right? So when the Wall Street thought the market was going to be bullish the next year, it actually went the other way.
So you mean to tell me, hold on, Larry, you mean to tell me the guy screaming at me on TV saying buy, buy, buy may not be right?
May not be right.
Okay.
But as a general rule, when majority of them are bullish, it's done the opposite, or when majority have been bearish, it's done the opposite. Okay. Now, that's just one indicator. Right. That's been, incredibly accurate since 1985. But there's some other ones, like another indicator I'll see or watch is, how much people are investing in real estate versus the stock market. And this where they've been more towards the stocks than real estate, and it's gotten to certain levels, this indicator has predicted, some bear markets that have come up. So, these indicators, you got to be careful with them because, just because they've been incredibly accurate in the past doesn't mean they're going to be accurate in the future.
Right, and I think that's a big key right there, right? Because we can look at all these different indicators from time to time, and they may tell us certain things, but not every one of them is going to be spot on every time.
That's right. Now, there's one you'll hear a lot in the news. They call it what they call the flattening of the yield curve. We read this one all the time. But this is where the 30-year Treasury rate, as compared to maybe like the 5-year Treasury rate, when they've become the same, that's been an early predictor of some trouble ahead.
So one thing, let's step back and explain it, because this to me is really interesting. When you're talking, so if I give this would be government rates, right?
Yep.
So if I give the government for my money for 30 years, they're going to pay me X%.
Yep.
And if I give it, in this example, for 5, they're going to pay me this. What you're saying is those two numbers eventually will be the same or even cross in some cases, right? So it doesn't make a lot of sense to give money for 30 years and get a lesser interest rate, right?
That's right. But think about it. Why would I do that? Why would I give the government my money for 30 years, only get the same interest rate I can get for 5 years, right? It might be because I'm having some concerns about the market in the short run,
Sure.
and I'm more confident in the longer run. You see what I mean? So when people when you've had that flattening of that yield curve, it's been an early predictor of markets correcting in the
Sure.
future. Now a lot like to use the 10-year versus the 2-year. Some like that better as an indicator. But again, that's one you hear more about in the news. It is one indicator, does not mean that it's necessarily going to happen again the way it has, but when it's happened, been a good predictor pretty consistently a few times before, it's definitely one you want to pay attention to.
Understand.
Right? So,
well, Larry, there's so many different things we could talk about here this week, and with all these fundamentals and these indicators and stuff like that. I think one of the most important things you said, though, is lots of things to look at. Not all going to be super spot on, and can't count on just one. Got to take a plethora of these in. Thanks for watching this episode here. Join us. We're going to be right back with a little bit more information on some alternate ways to navigate a potential construction zone.
Do you have a plan for how to generate income during retirement? Are you going to run out of money? In today's marketplace, retirees have concerns about the volatility of the market. People have concerns that the traditional balanced portfolio strategy that advisors used in the 80s and 90s isn't good enough in today's new normal economy. There are more secure options available for you today, and that's what we specialize in here at Centennial Wealth Advisory. If you don't yet have a plan or would like a second opinion on your retirement income plan, please call us today for a free, no obligation, complete retirement review.
Today's retirement challenges can be mastered. Knowledge is power because you can confidently plan ahead and make educated financial decisions for a successful and comfortable retirement. We are Centennial Wealth Advisory, Northern Michigan's financial advisors specializing in retirement planning with offices in Traverse City, Petoskey, and Gaylord. And we invite you to an informative and exciting live event with a complimentary gourmet dinner. You'll learn how to use the new tax reform to your advantage, the best way to generate lifetime income, how to identify and manage financial challenges, how to reduce your tax liability and increase your cash flow, how to maintain growth opportunities and reduce risk, and much more. Call 888-608-5825 to register and choose the date and location that works best for you. Thursday, December 6th, or Tuesday, December 11th at Boone's Long Lake Inn in Traverse City, or Wednesday, December 12th at the Otsego Grand Event Center in Gaylord. The live event starts at 6 p.m. and is free to attend with a complimentary gourmet dinner to follow. But seating is limited and fills quickly. Call 888-608-5825 to reserve your seats today. There is no cost and no obligation. Don't miss this important live event. Educated financial decisions. Call 888-608-5825 today.
All right, welcome back to Retiring Well. John Torbett, Larry Flynn, financial advisors and senior partners with Centennial Wealth Advisory, and we are talking today about alternative routes, one of which we thought, let's be in front of the river. Maybe you take your kayak to work, I don't know. But a lot of times what we find with folks is when they come to us and they're talking to us, they're talking about, okay, we've got a strategy put in place, but usually, Larry, we find it's basically about one strategy. Would that be fair to say?
Yeah, people will have a strategy, but like any strategy, there's pros and cons, right?
Sure.
Take, for example, somebody that's in the stock market, right? And let's say 100% in stocks, right? Well, if markets cooperate, roads are good, right?
Sure.
Ride's smooth, but if the market's not cooperating, as we've talked about, that's going to be painful sometimes, right?
Most definitely. And yeah, and in that strategy, what you have potential for a lot of growth, right? But what's one of those missing elements that especially come retirement planning that you want to have in your plan?
That's right.
More the safety aspect, right?
That's right. That's right. You know, there used to be that sign you'd see. It'd say price, quality, service. Pick any two.
Okay.
Right? Because
Yep.
you know, if you pay a really low price, you're probably giving up quality or service in some
Right.
way, shape, form. Right? Well, in the investment world, we have the same thing: safety, growth, liquidity.
Sure.
All right. Pick any two. Because if you look at most financial instruments out there, they're going to have predominantly two of the three. Right?
Right.
For example, cash. Some people might be sitting on cash, and you know, that's good. It's safe, right? It's
Yep.
fully liquid. They can use it at any time. But what are they not getting?
That growth element, right? Interest rates are still pretty low. We're starting to see them come up a little bit, but it's still not giving them much growth potential.
Right. Take that person that's in stocks, in a stock fund, right?
Yep.
It's fully liquid. They can pull out of the market anytime they want. It's got great growth opportunity, but what are we missing?
Yeah, there's no safety within
right.
those stocks. I mean, just like we've been seeing in the market as of late, there's a lot of volatility going on, so you got to be careful with that.
Right. Now you could look at a CD, you know, for example, if you invest with a bank and you give them a longer period of time to hold the money, they will typically give you a little better interest rate, right?
Right. So what? So that you've got the safety with the CD. You've got maybe reasonable growth for a little bit longer period of time, but with that liquidity factor, meaning, okay, if I want that money tomorrow, maybe you can still get it, but there might be penalties to get that money from the bank, right?
That's right.
Okay.
That's right. So I think that, you know, most people don't recognize they've got all one strategy. Well, first of all, ascertain what is that strategy. What two of the three are they getting?
Right.
Right? And what is the negative in that? Well, maybe by diversifying strategies, right? Not having everything, all your eggs in one basket. That's what my grandma used to
Sure.
say, right?
Yep.
I don't, John, if you knew that. Don't keep all
Are
your
you dating yourself here, Larry? I don't know. No.
But yeah, Grandma always said, don't all have all your eggs in one basket. But the same thing holds true with our investments. You know, maybe by diversifying the strategies, okay, that we're in, maybe having some, you know, that have the safety and growth, and some that have the growth and liquidity, and by having alternate strategies,
Okay.
maybe you can smooth that road out.
So yeah, so maybe there's a number of different investment tools and everything that you have access to come retirement planning, and maybe it's a matter of picking and choosing a little bit of each, maybe to blend those together. Is that what you're sort of coming up with, Larry? Instead of just saying, okay, I'm going to stick with this one plan because I hope that works, but instead maybe diversifying further amongst all the other strategies.
Yeah, John, I think that that's important, and I don't know why people don't take the opportunity to try to get a second opinion.
Sure.
You know, a lot of people, you know, and it's good, you want to trust your advisor, but if that advisor is just employing one strategy, maybe you might want to take a look at, you know, investigating some other strategies that you might bring alongside it.
Sure, and that's sometimes too, I mean, where the advisors may be limited within who they work for, maybe the company where they're limited to only offering certain types of products, basically, whereas being independent advisors here with Centennial Wealth Advisory, it opens up a whole line of options, and so it comes back to maybe what that client's, their intentions are, their goals are, and us then trying to match up with those goals, right?
You know, it's a good point, John. When you look at advisors out there, if I'm somebody that's just selling a product, well, guess what? I'm going to think that's right for everybody, right? But
Sure.
it might not be. So
Right.
Yeah. Anyway, folks, we thank you for joining us on this show. If you have any questions, just call the number on the screen. If you want that second opinion, if you want to, you know, see kind of how you're structured or maybe how we're handling situations with the market situation we have, then certainly give us a call. Thanks for joining us.